Celebrating 30 years of phenomenal trend forecasting, 5 times a week, Monday through Friday. Here's Gerald Celente with today's trends in the news.
Hi, this is Gerald Celente. It's Monday, December 10th, 2018, and here are some of today's trends in the news. Well, I'm back. I was away for a couple of weeks, went to the UK, visited my friend Kenny Young, who wrote, "Under the boardwalk, down by the sea," and then spent a couple of days in the UK with him, and then the both of us went to Nepal, visited an old friend over there, had a great time, went to Kathmandu. How about Kathmandu? Woof! What a place that is, man. Potholes all over the place. I mean potholes, hardly any pavement. People walking in the streets, motorcycles, little cars, beep, beep, bop, bop. Anyway, had a wonderful time, nice people, and I'm back. So, what's going on? Well, over there in Asia, guess what? Markets are down again. Over there in Europe, markets down again. Here in the States, Dow was down over 500 points. Yep, closed up around 34 points. Everything was down. NASDAQ was down. That's up too. Hey, I wonder if that plunge protection team came in. The plunge protection team. Who knows? Oil. Woof. Oil took a hit down on both crude and West Texas. Gold's down a bit, and Bitcoin keeps bouncing lower. Our man, Jonathan Cho, the Bitcoin man, crypto king, he really nailed it. Gotta say it. The most accurate one out there. Nobody called it like he did. It's right in your Trends Journal, history before it happens. Dow Industrial Average closed 34 points higher, erasing a 507-point drop. Yep. Facebook shares rose. Amazon up. Apple was down after the Chinese said they were going to ban some of them iPhone sales, but moved back up again. So, what's the reason? What's the reason for that big shift? Who knows? We could blame it on, hey, Trump had a good conversation with you-know-who from where knows when. They can make up anything. Again, an economic 9/11. It's underway. Why is oil going down? It's supply and demand. Nothing clearer than that. Again, they had that deal last week where OPEC and non-OPEC members agreed to cut back over 1 million barrels a day. But things are slowing down a little bit. Japan, the world's number 4 oil consumer, on Monday, today, revised its third quarter GDP growth down to an annualized rate of minus 2.5%. Can you imagine that? This is after negative interest rates, negative bond yields, buying up all that stuff, the government, and they can't boost the economy. So what's going to happen when this thing goes down? They're going to go negative, negative? Or negative, negative, negative? How negative can you get? It's a global slowdown. And that's why we believe oil prices are going down. And if you don't believe of a global slowdown, new figures point to a broader slowdown. The Eurozone slowdown was broader than previously suspected in the 3 months through September. That's over there in Europe. Just talked about Japan. Oh, how about IMF warns of slowing growth? They said that they are warning that global growth is slowing and the U.S. will likely feel the drag as well. It's a global slowdown. The markets were overvalued and overleveraged. They can talk all they want about trade, and that's what they're blaming all of this on. There have been no trade wars. Over there in the United States, what happened with the trade deficit numbers that just came in? Oh, yeah. The worst in 10 years. Guess that war's not working too well. Hey, but just like the rest of America's wars, Yeah, it keeps losing. So anyway, there's no trade war going on. It's a lot of nonsense. It's interest rates. And India seen holding rates steady. Analysts expect the Reserve Bank of India to support an economy that is losing momentum by leaving interest rates unchanged. That's right. Bank of Canada, last week, holds key interest rates steady. And what happened to that loonie? Well, it dips below 75 cents US for the first time in 18 months. That means it's going to cost you more to buy stuff, right? Oh, and I forgot. Oil prices going down. And what do they sell a lot over there in Canada? Oil. Doesn't look too good. And staying with those interest rates, investors cancel U.S. rate rise bets. That's right. Fed fund futures are pricing in nearly 40% chance that the central banksters do not touch interest rates again next year, and a 33% possibility it lifts only once. Marketers are pricing in a mere 2% chance the Fed raises rates by 3 times it indicated in September. They're going to keep the monetary methadone going. That's the only thing that will keep these markets up. Gold eases from 5-month peak as dollar firms. Again, dollar gets stronger. All these other economies are getting weaker. Who's going to pay off that $250 trillion worth of debt? A lot of it dollar-based. And copper prices. They're in bear market territory. Today they went down another 1.25%. Global slowdown. Asia stocks decline after China reports weaker than expected trade data. November exports rose 5.4% from a year earlier. They expected a 10% jump. And the number was also the weakest performance since a 3% contraction in March. Import growth was 3%, the slowest since October 2016. They expected a 14.5% rise. China's growth likely 6.3% in 2019 against an estimated 6.5% this year. And remember, a couple of years ago, they were talking about a 7% steady GDP growth. They can't take higher interest rates anywhere. So the expectations are that next year, China's going to start flowing more dough into there to bring their economy back up. You're seeing the softness in luxury goods. You're seeing it in housing. You're seeing it in a number of areas as we just identified. But they will juice the markets. What will that mean? A weaker yuan. Speculation in housing in the U.S. slows. In a week, signed a number of new home loans issued with terms of 3 years or less, typically used by investors to make a quick profit, dropped 11% in the July to September period from a year earlier. It was the smallest amount since the second quarter of 2000. 2015. Guess why? Higher interest rates have put a damper on U.S. housing markets. Yeah, and in the building sector, you're looking at stocks down deep in bear territory, around 30%. 20% is where the bear hangs out. And let's see, the S&P CoreLogic Case-Shiller National Home Price Index, which measures average home prices in major metropolitan areas across the nation, showed home price gains slowed for the 6th month in a row. And it's not only in the U.S., more warnings of an Australian property market crash. The latest fall takes the overall decline in Sydney's property prices since the market began to fall in July of 2017 to nearly 10%. Prices in Melbourne dropped 5.8% since November of last year. Household debt to income now stands at a record 189%, more than doubling over the past 30 years. So, how about those people that owe all that money? And they got a scam over there, well, I should say a deal over there in Australia. Here's the way they work it. The banks, two of the biggest ones, have heavily promoted interest-only loans whereby buyers are not required to make payments on the principal for a fixed period, often 7 years. Such loans account for a third of the Commonwealth Bank's outstanding loans. And it goes on and on. Moody's predicted that mortgage defaults and delinquencies would rise next year as a result of, quote, low-wage growth, not keeping pace with rising household expenses. Low-wage growth. Hey, what's going over there in France with those yellow vests out into the street? What are they protesting? Low-wage growth, no growth. That's what that's all about. And very interesting. You know who the leader of it is? Can't find one. Happened over the internet. That's right. What a difference, huh? The people over there taken to the streets en masse because they're tired of getting shafted, and it's a fight against the wealthy. The uprising is mostly organic, spontaneous, and self-determined. It is mostly about economic class, about the inability to pay bills. These are people who feel endangered by the current economic model. A person said, one of the people they quoted, the partial sacking of Paris's rich tourism-dominated districts last weekend was merely the physical expression of what all these movements feel deeply. In the view of analysts, hatred of the winners in a global system symbolized by urban elites. You got it. Hey, maybe it's another off with their heads time. Hopefully not. But that's where it's going. The gap between the rich and the poor worldwide keeps extending. People have had it. You know what I say? When people lose everything and they have nothing left to lose, they lose it. And they're beginning to lose it. This is Gerald Celente, and that's some of today's trends in the news.